Have you ever wondered what Bitcoin is? Or how can something digital, without a physical format, have so much value? Let's talk about it now. And believe me, the journey of understanding Bitcoin can be more interesting than you imagine. Bitcoin is the world's first cryptocurrency, created in 2009 by a mysterious figure known only as Satoshi Nakamoto. To this day, no one knows exactly who this person or group is, but one thing is certain. The creation of Bitcoin revolutionized the financial world. But what exactly is Bitcoin? Bitcoin, the digital currency. Bitcoin is a digital currency, which means it does not exist in physical form, like a 100 Brazilian reals bill or a 1 Brazilian real coin. Instead, Bitcoin is an electronic asset, meaning you can buy it, sell it, or use it to pay for products and services over the internet. The great thing about Bitcoin is that it is decentralized. This means that it does not depend on any government, bank, or financial institution to function. Instead, Bitcoin transactions are recorded in a global and transparent system called blockchain, which is a kind of digital ledger accessible to everyone, but which cannot be changed centrally. This system is the key to the secure functioning of Bitcoin and other cryptocurrencies. The decentralization of Bitcoin. You may be wondering, how can Bitcoin function without a bank or government behind it? The answer lies in its decentralization. Bitcoin does not belong to a single institution or entity. Instead, it is maintained and validated by a global network of computers, known as nodes. These nodes maintain the blockchain, recording and validating each Bitcoin transaction that occurs. What's more, for Bitcoin to remain secure, it uses advanced encryption, making it almost impossible to counterfeit or spend the same Bitcoins more than once. Unlike traditional currencies, such as the dollar or real, which can be printed or controlled by central banks, Bitcoin has a limited number of units. There will only be 21 million Bitcoins, which makes it, in a way, a scarce store of value. This is one of the reasons why many people consider Bitcoin to be digital gold. It has a finite quantity and, therefore, can serve as a protective asset against inflation and economic crises. How does Bitcoin transfer work? Let's talk about how you can practically use Bitcoin. When you decide to buy or send Bitcoin, you need a digital wallet, which works like a bank account for cryptocurrencies. In this wallet, you will have a public key, which can be shared with others so they can send you Bitcoin, and a private key, which is essential for you to access and control your Bitcoin. It is very important to keep the private key secret, as it is the full access to your funds. Bitcoin transactions can be made quickly, regardless of where you are in the world. When you send Bitcoins to someone, you are, in effect, transmitting an encrypted message that will be validated by the network of nodes that maintain the blockchain. The validation process involves mining, which is the process of solving complex mathematical problems. The reward for this? New Bitcoins are generated and added to circulation, but in a controlled manner, which prevents the currency from losing its value due to overproduction. The rising popularity of Bitcoin. Since its creation, Bitcoin has gone through several phases. At first, it was seen as a digital curiosity, mainly used by technology enthusiasts and those who wanted to avoid the traditional banking system. Over time, Bitcoin has gained popularity and, more recently, has become an important form of investment for many. Large companies began accepting Bitcoin as payment, and institutional investors began putting billions of dollars into cryptocurrencies. Some people even see Bitcoin as a form of protection against inflation and financial crises, due to its limited supply and the fact that it is not controlled by governments or central banks. But Bitcoin also has its challenges and criticisms. The volatility of its price is one of the main concerns. On some occasions, the value of Bitcoin has risen sharply, only to later fall, which has led many people to question its stability as a currency. Furthermore, the decentralized nature of Bitcoin makes transactions irreversible, which can be a problem in the event of an error. And despite its growing acceptance, Bitcoin is still not widely used as an everyday currency. What do you buy with Bitcoin in Brazil? This is still a niche issue, but every day more companies are starting to accept digital currency as payment. The global impact of Bitcoin. Bitcoin's impact is not limited to finance. The creation of Bitcoin started a true revolution in the world of cryptocurrencies. Today, there are thousands of other cryptocurrencies based on similar principles to Bitcoin, but with variations in how they work, transaction speed, and consensus algorithms. Additionally, Bitcoin helped popularize the concept of blockchain, the underlying technology that ensures all transactions are secure and immutable. The blockchain, which emerged with Bitcoin, has the potential to transform a series of industries, such as finance, healthcare, supply chain, and even government. Now that you know what Bitcoin is and how it works, it is clear that it is not just a currency, but a technology that can change the way we deal with money, security, and even trust. How does Bitcoin maintain security? The crucial role of blockchain. Now that you know what Bitcoin is and how it works, let's delve into one of the most fascinating aspects of this digital currency. How does Bitcoin maintain transaction security? The answer lies in a technology called blockchain, and this is where the magic really happens. What is blockchain? Blockchain is, in simple terms, a digital accounting book. However, he is much more than that. It is a system decentralized and distributed, which means that, unlike a traditional ledger, which is kept in one place, blockchain is maintained by thousands of computers around the world. These computers form the network of nodes, responsible for verifying and recording all Bitcoin transactions that take place. And the most impressive thing is that this entire process occurs without the need for a central authority, such as a bank. Each Bitcoin transaction is recorded in a block. These blocks are linked together, forming a continuous chain, hence the name blockchain. When a new block is created, it contains information about the transaction, such as the amount sent, the sender, the recipient, and the time of the transaction. The block also contains a sort of fingerprint of the previous block, which ensures that once a block is added to the chain, it cannot be changed or deleted. This feature of blockchain is one of the reasons why it is so secure. How cryptography ensures security? Now, you may be wondering, how can blockchain ensure that these transactions are secure if there is no bank or government overseeing it? The answer is in encryption. Bitcoin uses advanced encryption to ensure that all transactions are secure and that no one can alter the recorded data. Each Bitcoin transaction is digitally signed with a unique private key, which is associated with the wallet of the person sending the Bitcoin. This means that only the owner of the private key can authorize a transaction, making the process of sending Bitcoins virtually fraud-proof. Furthermore, encryption also protects the user identity secret, ensuring that no one knows who is sending or receiving Bitcoin, only that a transaction was carried out between two wallets. Transaction validation and the mining process. One of the most fascinating parts of Bitcoin is the transaction validation process, which is done through mining. Mining is the process by which miners solve complex mathematical problems to validate transactions and add new blocks to the blockchain. Miners are rewarded for their work with new Bitcoins. But why is this important? Well, mining does two things. First, it ensures that transactions are verified fairly and without the need for a central authority. Second, it creates new Bitcoins and puts them into circulation, but in a controlled manner. This is essential, as the number of Bitcoins is limited to 21 million, and mining is the only way to create more units of this currency. However, mining is not an easy task. To solve the mathematical problem, miners need powerful computers capable of processing billions of calculations per second. This process, called proof of work, is essential to ensure that transactions are secure and that the Bitcoin network is not hacked or defrauded. Decentralization and resistance to censorship. Bitcoin's decentralization is one of its greatest strengths. Because blockchain is maintained by a network of computers around the world, no one has complete control over it. This means that to alter or falsify a transaction, someone would need to hack into most of the network's nodes, which is extremely difficult to do. Furthermore, Bitcoin is censorship resistant. This means that no one can stop you from sending or receiving Bitcoins. In countries with restrictive or unstable financial systems, Bitcoin offers an alternative that is accessible to anyone with internet access. This puts financial power directly in the hands of people, without the need to rely on banks or governments. If you've come this far and haven't liked it yet, what are you waiting for? Are you waiting for Bitcoin to hit $500,000? Smash that like button right now, help this channel, and, as a bonus, you'll also strengthen the algorithm. And look, if you don't subscribe, Bitcoin will go up and you'll lose everything to a 12-year-old boy who doesn't know how to talk and spends all day in his room pretending to be a girl to steal Bitcoin from lonely people. The security and immutability of blockchain. As I mentioned before, each transaction is recorded in a block, and once a block is added to the blockchain, it cannot be changed. This is due to a concept called immutability. When a block is added to the blockchain, it contains code called hash, which is like a fingerprint of the block. This fingerprint is generated from block information, including recorded transactions. If someone tries to change any information in a block, the block's hash will also change, and this will be easily detected by network nodes. This immutability is crucial to the security of Bitcoin. It ensures that no one can change a transaction once it has been recorded on the blockchain. Furthermore, it makes transactions transparent and auditable, which is a huge improvement over traditional financial systems, which often lack transparency. Although Bitcoin's security system is highly advanced, it is not perfect. For example, although the blockchain itself is secure, the security of digital wallets depends on the protection of private keys. If someone manages to access your private key, they can steal your Bitcoins. Therefore, it is crucial to use secure wallets and take precautions such as using two-factor authentication and keeping private keys in secure locations. Another challenge is the scalability of Bitcoin. Because the number of transactions the network can process is limited, Bitcoin has faced congestion issues, especially during times of high demand. This may result in higher transaction fees and slower confirmation times. Meanwhile, several solutions are being developed to improve Bitcoin scalability, such as implementing Lightning networks and other second-layer technologies. Bitcoin is secure because it combines a series of innovative technologies, such as cryptography and blockchain, that ensure transactions are transparent, secure, and immutable. The decentralization of the network and the mining process are fundamental to this security, making Bitcoin a unique digital currency in the financial world. How is the value of Bitcoin determined? The impact of the market. Now that we've explored how Bitcoin is secure and how it works, let's take it a step further. How is the value of Bitcoin determined? And why is the price of Bitcoin so volatile? Let's understand together the impact of the market, supply and demand, and the factors that influence the value of this unique cryptocurrency. Supply and demand. The basis of Bitcoin's value. The value of any asset, be it a stock, gold, or Bitcoin, is largely determined by supply and demand. In the case of Bitcoin, this dynamic could not be more relevant. The supply of Bitcoin is limited. There will only be 21 million units. This creates a digital scarcity, similar to gold, which increases the value of each unit over time, especially as more people realize Bitcoin's potential as a valuable asset. If more people start buying and holding Bitcoin, demand increases. But since supply is finite, this greater demand pushes the price up. On the other hand, if demand decreases, the price tends to fall. The scarcity of Bitcoin is, therefore, one of the biggest factors influencing its value. The role of mining and the issuance of new Bitcoins. Bitcoin mining also plays an important role in determining value. As we mentioned earlier, miners are rewarded with new Bitcoins for validating transactions. However, the reward for mining decreases over time. This happens in events called halvings, which occur approximately every 4 years. During a halving, the reward for mining a block of Bitcoin is halved. This means that the supply of new Bitcoins decreases, which could further increase scarcity and, consequently, the value of Bitcoin. This mechanism of gradual reward reduction is known as deflationary emission model, which is designed to prevent inflation and ensure that Bitcoin becomes increasingly scarce over time. The halving creates an expectation in the market, as it can, historically, be followed by significant increases in price. Volatility. Why does Bitcoin price go up and down so fast? If you've already had contact with Bitcoin, you've probably noticed that it is one of the most volatile assets on the market. But why can the price of Bitcoin rise or fall drastically in such a short period of time? Firstly, Bitcoin is still considered an emerging asset. This means that the cryptocurrency market, although growing rapidly, is still relatively small compared to traditional financial markets. As a result, buying and selling movements of large amounts of Bitcoin can have a significant impact on the price. Furthermore, the Bitcoin market is sensitive to a series of external factors. An announcement from a large company accepting Bitcoin as payment could boost the price, just as a rumor about stricter regulations in some country could send it falling. The lack of a central authority regulating Bitcoin makes the currency susceptible to influences from news and external events, which contributes to volatility. Another factor that contributes to volatility is the nature of the speculative market of Bitcoin. Many investors buy Bitcoin not with the intention of using it as currency, but to speculate on its future appreciation. This means that in many cases, the price of Bitcoin is influenced more by expectations and speculation than by solid economic factors. Institutional adoption and the impact on the value of Bitcoin. In recent years, we have seen a significant increase in institutional adoption of Bitcoin. Large companies such as Tesla, MicroStrategy, and Square have started purchasing Bitcoin as part of their cash reserves. This increased Bitcoin's credibility in the market and helped boost its value. Furthermore, the growing acceptance of Bitcoin by institutional investors and large mutual funds also contributes to long-term price stability. As more institutional capital enters the market, Bitcoin is likely to become more recognized as a legitimate asset class, which may reduce its volatility somewhat in the future. However, this adoption also comes with a risk. As Bitcoin is still seen as a risky asset, any economic insecurity or global financial crisis, it can cause institutional investors to withdraw their investments quickly, which can cause a significant drop in price. External factors. How news and regulations affect price. External factors have an immense impact on the value of Bitcoin. Government decisions, changes in regulation, and even news about hacks or bankruptcies of large cryptocurrency exchanges can drastically affect market perception and, therefore, the price of Bitcoin. For example, in 2021, when China's government banned Bitcoin miners, the price dropped considerably. However, when countries like El Salvador began adopting Bitcoin as legal tender, the price skyrocketed. This shows how sensitive Bitcoin is to changes in the global regulatory landscape. Bitcoin's value is determined by a combination of factors, including limited supply, market demand, mining, volatility, and the impact of news and regulations. While Bitcoin's price is unpredictable, growing institutional adoption and global interest have the potential to shape its future. How to invest in Bitcoin. Risks, strategies, and care when entering the market. Now that you know how Bitcoin works, it's time to explore how to invest in it. I understand that it may seem a little scary at first, but I want you to know that it's not a big deal. Bitcoin has been a true financial revolution, and over time, it has attracted more and more people to this market. So, let's go without rushing so you can understand in a simple and clear way how to get involved with Bitcoin in an intelligent way. Guys, check out this LG 55-inch 4K Smart TV. If you want to turn your living room into a real movie theater, this is your chance. With an Alpha 5 Generation 7 processor, you'll have amazing image quality thanks to AI quantum and nanocell technology. And the best part? It's super slim, giving your home a touch of elegance. And that's not all. It has local dimming to improve contrast, Alexa and Chromecast built in to make your life easier, and WebOS 24 for super fast and intuitive navigation. What are you waiting for? Hurry up and enjoy this super launch. Your entertainment will never be the same again. If you want to know more, click the link in the description. How to buy Bitcoin. The first thing you need to know is how to comprar Bitcoin. The good news is that it doesn't have to be complicated. There are a few ways to do this, but I'll tell you the easiest and most accessible ways. Cryptocurrency exchanges. Exchanges are basically platforms where you can buy, sell, and even exchange Bitcoin for other cryptocurrencies. They work like a broker, only online. If you've ever done any type of stock or foreign exchange transaction, you'll feel right at home. Platforms like Binance, Coinbase, and Kraken are the most popular. All you need to do is create an account, transfer money to the platform, and that's it. In just a few minutes, you'll be buying your first Bitcoin. Digital wallets. Okay, you bought your Bitcoin. Now, where are you going to store it? Digital wallets are the place where you will keep your coin. There are wallets hot, which are online, and cold, which are physical devices, meaning you store them offline. Cold wallets are safer because you are not exposed to the risk of hackers, but hot wallets like Trust Wallet or MetaMask are more practical for those just starting out. Investing in Bitcoin. What are the options? The cool thing about Bitcoin is that it offers different ways of being invested. You don't need to follow a single strategy. It depends on what you are looking for with your money. If you think Bitcoin will continue to rise, a good strategy is to simply buy it and follow it from afar. This is what a lot of people call hodling, a play on the word hold, which means to maintain. The idea is very simple. Buy Bitcoin and save it. Don't worry about daily price fluctuations. Think of Bitcoin as a store of value, just like gold, and be patient for it to appreciate in value over time. On the other hand, if you like a little emotion and are willing to take a greater risk, you can take a chance with the trading. In this case, you will buy and sell Bitcoin more frequently, trying to catch short-term price changes. It's not a strategy for everyone, as it requires you to stay alert all the time, but anyone who knows what they're doing can make quick profits. A calmer alternative, if you don't want to get so involved with buying and selling, is to invest in cryptocurrency funds. They work like any investment fund, but focused on digital assets. This way, you let the experts handle the complicated part. How to protect your Bitcoin investment. Now, let's talk about how you can protect your investment. The last thing you want is to be anxious about losing everything. First, it is important to diversify your investments. Although Bitcoin has great growth potential, you don't need to put everything into it. Diversifying your investment portfolio by including stocks or other types of assets can help balance risk. It is also essential to protect your private keys. They are the key to accessing your Bitcoins. If you lose these keys or someone steals them, you could lose your entire investment. So, don't forget to make backups and keep your information secure. And of course, like any good investor, follow the market. You don't need to be an expert, but it's important to be aware of how Bitcoin is being treated in different countries, the innovations that are happening in the crypto world, and the news that could impact its price. Investing in Bitcoin doesn't have to be a big deal, and it's certainly not a path you'll regret exploring. Despite the risks, Bitcoin has proven to be one of the best ways to preserve and even increase your assets in the long term. For those who believe in the potential of a decentralized currency and the future of digital finance, Bitcoin is a unique opportunity. In the next part, we will look at the futuro do Bitcoin, how it can evolve and the impact it can have on traditional finance. Stay tuned, because the best is yet to come. The future of Bitcoin, the impact on the global financial system. Now that you understand how Bitcoin works, how to invest in it and the risks involved, let's take a look at the futuro do Bitcoin. The question everyone asks is, where will Bitcoin go? And that's an excellent question. What we know is that Bitcoin has enormous potential to change the global finance in ways we can't even imagine yet. Let's explore some possibilities of what could happen in the coming decades. Bitcoin as a store of value. One of the most popular theories is that Bitcoin will consolidate itself as a store of value global, something that people can use to protect their wealth from inflation and economic crises. Throughout history, gold has been seen as a safe haven. But now, with the digitization of the economy, Bitcoin is becoming the modern version of the secure asset. What was previously considered a long-term investment now fits more efficiently in the digital world. Governments and central banks print money all the time, which can lead to devaluation of currencies local and inflation. Bitcoin, with its limited supply of 21 million coins, offers an alternative that does not depend on the decisions of governments or banks. By being decentralized and not subject to inflation, Bitcoin can indeed become a true fortress of value in the coming years. Big names like Tesla, MicroStrategy, and Square have already joined the game, purchasing large amounts of Bitcoin and even starting to accept cryptocurrency as a form of payment. And it's not just technology companies. Banks and financial institutions traditionalists are also starting to look at Bitcoin as a legitimate form of investment. The growth of institutional adoption is one of the biggest indications that Bitcoin is on the right path to becoming a fundamental part of the financial system. Over time, as more companies and institutional investors get involved, confidence in Bitcoin tends to increase, and with it, the stability of the currency should also strengthen. Furthermore, we have seen the emergence of Bitcoin investment funds that allow traditional investors to enter the market without having to deal with the complexity of wallets and exchanges. This will only increase as the market matures, making Bitcoin increasingly accessible to a wider audience. Bitcoin as currency of the future? Another interesting point is the possibility of Bitcoin being used as a global currency. This would mean that Bitcoin could replace the dollar or other currencies in international transactions, or even be used as an official currency in some countries. We already have examples of countries like El Salvador, who have adopted Bitcoin as legal tender, and many believe that more countries may follow suit as Bitcoin gains acceptance. The advantage of Bitcoin in this scenario is that it is decentralized, that is, it does not depend on any central bank or government. This gives a financial freedom much greater for people and companies around the world. International transactions would be much faster and cheaper, without the need for intermediaries, such as banks, which charge high fees. Technological innovation and the future of blockchain. The blockchain, the technology behind Bitcoin, also plays a fundamental role in the future of this cryptocurrency. Bitcoin is not just a digital currency, but a revolution in the way we store and share information. The blockchain, with its security and transparency, can transform not only the financial sector, but also other areas such as healthcare, logistics, and even digital voting. Over time, new innovations may emerge, making Bitcoin even more efficient and accessible. The scalability, a transaction speed, and others' cost reduction are always being discussed within the developer community, and improvements such as Lightning Network are helping to solve these problems. This network allows Bitcoin to be used for smaller transactions, such as buying a coffee, without having to pay huge fees. The future is here, and Bitcoin is just getting started. If there's one thing we can say with certainty, it's that Futuro do Bitcoin it's brilliant. With growing adoption, continued innovation, and impact on global finance, Bitcoin has all the makings of one of the biggest milestones in economic history. Every day, more people are discovering the power of Bitcoin and how it can bring financial freedom and autonomy. It doesn't matter if you're an investor, an enthusiast, or someone still getting to grips with the concept. The important thing is that Bitcoin is here to stay and is just starting to show its true potential. Now that you understand what Bitcoin is, how it works, how to invest, and the impact it can have on the future, it's time to reflect on your own journey with this currency. The cryptocurrency market is constantly evolving, and Bitcoin is the leader of this revolution. If you like this content and want to learn more about cryptocurrencies, digital finance, and much more, be sure to check it out our next video. The learning journey never ends, and the future is digital.